Hey everybody, don't you wish you were here? Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Tony Greer, live from Nashville, Tennessee.
Live and in person, Mag. We don't have to stare at each other through our computer screen today. Isn't that nice?
I know, it's fantastic. We're kind of doing it guerrilla style. You will laugh. Maybe you'll see some behind the scenes of how we have this set up. But we wanted to sit next to each other because we're both down here for the inaugural TG Macro Conference, where we're going to hear a lot of fantastic conversations. In fact, we got the hot seats right behind us.
Yeah, the stage looks great. This room is cool. It's got an amazing vibe. Totally much hipper than like most, typical Marriott conference rooms, I would say, or something like that. So
yeah, totally. And so already some great people. We have at least one in the room who came downstairs to get early registration. And if I'm telling tales of the behind the scenes, I think maybe there's a beverage waiting for us.
Yeah, right after this. Yeah, we are in Nashville after all, aren't we, Maggie?
Yeah, that's right. We got to do the town right.
Yeah, we're gonna relax today.
But we got to talk some macro first, because while we were sort of getting ourselves situated down here, just had a quick check of everything. We had some things on the move today, including oil, which I was traveling and heard that things were moving along, and Iran was saying the talks were progressing and it seemed like it was on track, and all of a sudden oil's up 4% because people are concerned maybe that we are moving toward a more, or the risk of conflict might be rising.
It sounds like that is provable on Twitter at this point, that we've got all kinds of carriers and sort of kinetic military activity that's way above my pay grade. And all I know is that oil was 65 and a quarter bid on the close today. So, that is sitting there perched up, waiting to see exactly what type of attack is going to happen on Iran, what that looks like, how long it looks like it's going to be for, and then where it's going to adjust the price of oil to, right?
If there is one, because we do know this administration is very good at optics as well, right? They wrote the book on kind of setting the stage for aggressive talks. So this might be, if there were to be, you think it's going to happen, but if there were to be, is conflict actually priced in at 65? It doesn't seem like it.
Well, not much. I mean, the idea is that if we weren't attacking Iran, it would be back in the 50s kind of thing. So it's kind of just getting on its launch pad. But given everything that, I can't put my Twitter feed down lately, and partially is because of, to monitor this situation, but also to see some of the Epstein stuff. And I don't want to talk about that, but that leads me to believe that we're going to be very focused on Iran in the headlines for the next several years, or something like it, or I have no idea. But things seem like they're at some kind of a big turning point around here. You know what I mean? And that's just the vibe that I get off of Twitter is, and, not to go, I don't want to go into the files at all, but it's the difference between a president that ran on putting these people away and now there's nothing being said about it and we're being told to move on.
His base is not happy about
it. The whole base is like, we're not moving on, pal. So that's why it feels like things are very jittery around here, and that I wouldn't bet against something happening. So, and that's just, my gut. That's all we have. And I don't want to bring the politics in it at all.
No, I think it's appropriate to when you're thinking about the risks, what might lead to something happening, or at least like amplify the possibility of something happening. I have to tell you, this is, I think, very telling of the macro moment we're in, because of all the things we were going to talk about today. I didn't have Epstein files on my bingo card.
No,
but like, there's so many things to watch, and there's so many potential cross currents that it's a sort of explains maybe the volatility. It's a tough market.
Yeah, it's really difficult, but it's just the shape of the bull market. I feel like that's changing right now. The S&P is definitely spinning its wheels, around 6,900. It's roughly, I think as of last night's close, it was exactly unchanged for the year. And so, we've got a little bit of different leadership with the oil rally. We've got oil services out front this year, up 30% and running. We've got uranium, solar stocks, gold miners. Those bull markets are intact. But on the downside, we've got big sectors like software, off 23%. It was wild, Maggie, as of yesterday's close, both software and Bitcoin were off 23.4 something for the year, like lockstep. And so that to me is, that's the bifurcation in the market that we're talking about. We're talking about the potential bear market in tech stocks around an AI bubble and overvaluations. And we're talking about a nascent bull market in natural resources. A lot of it caused by a lot of the things the Trump administration is doing, the change in the global landscape. Marco Rubio gave a kind of inspiring speech in Munich over the weekend, I guess it was, talking about, Europe. He basically said Europe has got to sort of pull themselves up by their bootstraps a little bit, which I thought was a good
little
message.
less aggressive on Europe than JD Vance was, though.
Yeah.
A little bit more like, we're in this together. We've got
Yes, it was
right?
very lovey-dovey. It was. And yeah, he's got a different demeanor than JD
Oh,
Vance
good cop,
as well.
bad cop.
Yeah, probably, right? Yeah.
I think he is in the post of diplomat.
Yeah.
Right.
Good point. Good point.
As well. So do you feel like, hey, by the way, hey everybody on Substack and YouTube joining us live, cool hand Luke. I wish you were here with us too. Next time. It's the first inaugural. But it's fun to get together in real life. I have a feeling we're going to be talking about commodities. It's going to come up a lot at this conference because people have questions about whether this is a kind of I don't want to say short term, but a sort of a move that is sort of happening in the context of the Trump administration, maybe, or a little bit of a, this year, 2026, or if it's something much more structural and sort of like the beginning of a decade-long super cycle.
I'll take the latter for 1,000, Maggie, if I can. Yeah. Yeah, that's what I think. You couldn't help but notice, to me, the reason that I believe that is because of how markets came out of Liberation Day last year, right? In April, we had a big reshuffling of the S&P, basically a reshuffling of the stock market. Trump was throwing any comment that he could think of out about tariffs to literally just to confuse everybody. They got Europe to puke to U.S. retail 1,000 points off the highs. The market came all the way back, and what came out on top was gold miners, industrial miners, uranium miners. Those are the sectors that led last year. And I don't think that that was a one-time event, because I don't think that the bigger market, the portfolio managers now are finally moving towards, buying more metals and natural resources products. And we can't forget that it was only October of last year Morgan Stanley rearranged the portfolio to 60-20-20, right? So has the whole world had the chance to make sure that they've got the proper metals and mining exposure? And I'd argue that they haven't yet. So that's why I think that this is going to be with us for quite some time, or at least I hope so.
These are big ships to turn, right? Like when you talk about, because one question we get a lot is, did it happen already, right? Like we saw that the prices of especially silver moved so quickly. It's like, whoa, did I miss it?
Yeah. Well, along that line, Maggie, look at, how oil is still, like you said, only 65 bid with really not much of a risk premium priced in. And oil services are up 30% for the year. XLE is just broken out through a $50 range top and gone up 10%. Exxon's a $150 item. You know what I mean? And people are like, why are oil stocks going crazy?
Yeah.
You know what I mean? Because oil's not going crazy in any way, shape, or form. It's gone from the bottom of the range to the top. And these stocks have all broken out with technical significance. And so that's something that I'm not fading, because they weren't lockstep with WTI and gasoline. They were like, oh, commodity trades on, energy stocks better to buy. That's it. That was the only excuse that they had.
But let me ask you, does the argument you hear in tech that the stocks ran ahead of anything happening in AI and priced in all of the best possible news? Does the same not apply, that maybe these stocks are getting a little ahead of themselves based on where we are?
Yes, but NVIDIA took off 3 years ago. Right. And,
so it can happen, just not yet.
Well, gold miners took off last year. You know what I mean? They were sitting there, at the bottom of their range doing absolutely nothing until gold finally broke above 2K and then above 3,500 and that whole thing. So I do think that this is fairly new. I do think that the bull markets in gold and silver are not being friendly to people that want to get in. You know what I mean? Like, there haven't been many dips. The dips have been steep in price, short in duration. There's nobody that's able to accumulate any at lower prices. And they trade indicative of markets with a line of buyers lined up. The dips don't go deeply into the moving average support. They go to the 25-day or the 50-day, and they're up and right. So it's very difficult to get your hands on this stuff.
To that point, so the long only people who may be now changing the way they think about portfolios, and so now it's not 60-40, now it's 20 built in. Do they just sort of dollar cost average and just like every month we've got that? Is that a sort of not permanent, but is that a now bid under the market kind of regardless of what happens in the commodity space?
It feels like there's a bit of a scramble, certainly, to get these stocks on people's pads. And I think that it's a little bit of, like you said, that it could be the wealth managers going out and moving the sort of, smaller pods. And it's also the mutual funds that are going out and deciding what part of this natural resources rally they want to be a part of. And, in addition to the fact that we're now 1 year into the Trump administration with a lot of support for the trades that he set in motion continuing, right? Like he's going to be supportive to the oil guys. He's going to be supportive of uranium. Solar is definitely happening like mad in this country to build up the AI data center, backup energy plants and things like that. So all of these bull markets are going off in different directions, but breakouts are working. And I think that the S&P is going to be fine in the end.
Rich C, we wish you were here too. Thanks for the comment. Mutha says petrodollar is back, took out Venezuela, Iran, who sold oil in yuan. Russia's already making headlines, all doing trades in the US dollar. Do you feel like that does the bull market in commodities in any way change the dollar devaluation story, or is that a question we should ask?
No, I don't know. Yeah,
Coffee tomorrow.
Yeah, well, Brent,
yes,
Doomberg.
That's right.
Yeah, we have plenty of people we can ask that tomorrow too, which will be great.
It's a good point to make though, because it was a big narrative, or it has been a big narrative that we might be in a different, dollar regime, and there are plenty who are going to continue to make that, by the way. But interesting. He points that out.
Yeah, at least it's shaken up a little bit in the last several days where rates have kind of taken a little bit of a nosedive towards the bottom of the range. And I guess the dollar's moving, but it feels like last year where the group thesis is to be short the dollar and everybody is. And so it doesn't go down very far, very fast, that kind of thing. It's just a popular narrative and popular idea, especially with Trump talking about 2% interest rates in 10 years. So if he ever gets anything close to that, those will be good sectors to be in, as will retail, as will home builders. And so you're gonna have to pick your poisons here.
That might not be easy though, getting those yields down. I saw that Treasury. I mean, really, the 10-year has been in a pretty tight range, but it kind of backed up a little bit today. The Fed meetings came out. They seem divided about interest rates. I mean, they're going down, right? I mean, is there any way that anybody in the Fed can do anything but lower rates at some point?
No, but I mean, you can argue. If I pull up a chart of the 10-year yield, Maggie, we can both stand here and argue vehemently that rates aren't moving. Right, the last 5 years, rates have been in a range in 10 years. Right, so there's
pretty tight one.
Yeah, super
despite
tight.
Everything that's going on.
Exactly. So my argument continues to be that rates are going to be mean reverting until they're not. And if rates are mean reverting, that's a great sign for the stock market. Stock market loves that. Certainty in the bond market, right? Like no dislocations lower on out of line inflation prints. That's perfect for the stock market. So that's why I can remain bullish the S&P, despite the fact, feeling that technology is going to continue to back off and natural resources are going to rally, even though they're a smaller part of the stock market.
We saw tech bounce a little bit today. And again, it seemed like it was on this news, maybe Meta's going to use NVIDIA chips, and then somewhere else, Amazon. But is it just a little bit of leveling off? Does it feel like the trajectory is still down for technology and rotating other sectors?
Well, the technology, there are different stories within technology, right? There's, NVIDIA and semiconductors, which refuse to break down, right? They're getting support from a cyclical idea and the AI trade. And then there's software, which is getting eliminated by AI, apparently, and then there's cybersecurity, cloud storage, internet. Those sectors are all negative on the year. Meanwhile, semiconductors are up like 20-something%, or
I find
maybe
it odd
15.
that cybersecurity keeps getting hit, only because all we talk about is the fact that the nature of conflict is changing.
True.
So I don't know. Maybe it's just in the disconnect of overvalued, grouping them all together.
We ran those stocks up a flagpole for the last 4 years, Maggie. I mean, forget it. Software showed up on my scans the first month that I started TG Macro 10 years ago, and I started paying attention a lot closer to markets the way I wanted to pay attention to. And all of a sudden I'm like, okay, IGV. And I didn't even know what it was for like 3 weeks in a row of and then 2 months later, I'm like, okay, this thing is on the top of my screens all the time. I guess I got to figure out what it is. Software, bought some just because it keeps performing. And I was in the trade for like 10 years.
Yeah.
And then sold it to buy some other stuff. But it has been on the run for a good, Mark Andreessen's article, Software is Eating the World, was like 2011. And that was like in the middle of the rally. And you know what I mean? We got another 10 years after that. So like these things are very due to.
I think that some people, especially who are in that world, find it hard. We're leaving when every company is technology at its base, that somehow we're going back to like this being the era of commodities. But Is that what the market's telling us?
Ah, man,
Is that an open question?
I get that, I get that against the backdrop of everything that's going on in the world. Everywhere you look, there's regime change.
And yeah,
So that's why it wouldn't shock me to see there be a completely different narrative in the stock market for the next several years. We had a glimpse of it in 2022 when we had we were talking about it as a great rotation, where everybody was selling technology and buying natural resources. That's when we had, that was the year we had 9% headline inflation, and everything went bonkers and the bond market was offered. And so we're getting a little whiff of that now, but rates are still going lower because we're going to run the economy hot. And that's why I think natural resources are often gone a little bit. So
we got some questions coming in. I can't believe
Cool.
I can actually see them. And so can you, for a change.
Yeah.
So what does TG think of cannabis stocks now?
Disappointed, as the saying goes from the movie, disappointed. I mean, the whole sector still is a Lucy and the football Charlie Brown thing. Like we can't get full support from the feds. We can't get.
I thought that was we had that big rally when it looked like it was happening.
Exactly.
Just too many things on the agenda. Because it doesn't seem like anyone's particularly against doing it.
No, it's just not getting done right way politically. It's not, the stocks are not responding. They've had, a couple of really kind of brutal fade rallies that it's not a sector that excites me when my wheelhouse, I mean, not that it is in my wheelhouse, but when natural resources stocks in my wheelhouse are going up at, clips that they are now, like, forget the cannabis sector now. You know what I mean? Like,
think about where you're.
There's got to be, you got to, read the room and kind of have your noise cancellation policies on things that you don't need to dig into. And I don't mean to be rude to the question.
No,
it was a perfectly good question. It's just like going into 2026, man, it's like number 20 in my priority list.
Well, it also reminds me of something that we've talked about with Denise Scholl when we've done those trading sessions at events about not having too many things on your pad. Like, you've got to be able to watch, or your trading list, you've got to be able to sort of understand and watch, and you could get distracted if you have too many things that you're chasing, right? You don't really focus on where the opportunity is.
That's my middle name, is to be, focused in the number of securities you have. I have a product where, people ask me to help me manage the risk that they have existing. And I say, like, first of all, how many line items are on this? I'll say, are there more than 15? And some people go, oh, 15. Like, what are you kidding me? Like, I have 65 line items in my thing. And I'm like, okay, I'm going to tell you right now, I can't help with that. Get it down to 15 and I'll help you.
Is that the sweet spot?
I mean, it's something where, no, I don't know if there is. I mean, put it this way, Elon Musk can probably trade 60, you know what I mean? Or something like that. But for me, who's a total knuckle dragging, pea brain reptile, the fewer things I have to worry about, the better. And they all move pretty fast. So I don't know how you can get your hands on, more than 4 or 5 sectors using your computer and your phone, which is what I'm doing. But, portfolio managers have different tools, but at the same time, I don't understand. Because if you force yourself to grade the risk and say, okay, this is a low risk, this is high risk, this is my favorite, this I have conviction in, you can't like 60 things. You know what I mean? You can't. Like, your brain does not have the capacity. So I always just say, let's be focused. I really appreciate the Druckenmiller strategy of, I like lot my eggs in one basket, and I'll watch the basket really close. Yeah. And
well, so a lot of the really famous market wizards have done that and traded really small because they learn the way the stocks move, right? Or the sector moves, and really inherently sort of, start to see patterns. So
and then if you have all these positions going down your pad, and all of a sudden one becomes like the glaring, like, this is going to happen, like, how are you going to decide what you're going to get rid of, right? How are you going to upsize this if you have all these other little things that you're in love with, that you have to be exposed to? Half of them, I'm going to tell you right now, have no shot at succeeding.
Yeah.
You know what I mean? And so I don't mean to be.
No, it was a great question, because it sparked a conversation I know we're going to have, because you've never actually told me, like, what your favorite number. It's going to be different for everyone. If you want to share, I would love to hear how many trades you all have on your pad. Y'all. Yeah. I didn't exactly I used like the Jersey version of it, but I'm going to roll out y'all somewhere here. Yeah.
That's right.
How many trades you all have on your.
It is a good question.
But it's a great question. And if it's a lot, it's interesting. I also wonder how you can manage risk on all of that too, because in volatile markets, I know a lot of you will take a pump to protect yourselves, and you position size. Dale talk about this on Fridays.
You have to be able to drive this car around the market. You know what I mean? You can't drive a 65 line item car around anything. What if, if there's 4 or 5 things that you have to get out of at once, you're dead in the last 2 or whatever it is.
Especially the way these markets move.
Yeah.
Everybody found that out with silver just recently, right? Yeah. Somebody's asking, where's the party tonight? 4 times. Thanks, Parscale. There are maybe a few.
Yeah.
We're going to eat first, I think.
Yeah.
Get ourselves a base.
Yeah, we're going to be around. We're going to be right locally. It comes out, the Virgin lobby is where there'll be tons of people going in and out from the conference and things like that. We have a speaker dinner first, and then I'm going to open it up to for people to come a little bit afterwards.
Rich C says, I'm a leverage degenerate. Too many.
Yeah. See,
I get leverage. That. We didn't even talk about leverage.
So I tease those people right away. And anyone that has more than 20 positions, they say, oh, so you think you're Steve Cohen?
Yeah.
Okay, cool. Like, well, let's try to manage it that way.
Does he have them?
Probably not.
No,
probably
right?
not.
It's not.
Yeah, well, he's got his pods and things like that of risk managed, but
Paul says now you're speaking my language, because I think Paul's from Texas. So right want to bring up oh wait, Doug has 55, way too many. Okay, we all need to have a session, maybe.
Good God.
Maybe we'll do that. We got something cooking that we'll let you all in on soon. To maybe this would be, you'd all be good candidates to join this little education project that we're thinking about. Crypto. What is going on? I mean, I hear, there's no narrative. There's no support. I don't know. It looked like it was kind of bouncing back, but thoughts there. And are you willing to count it out totally, or is this just dormant until it's not?
Well, a couple of things happened in crypto. I think the biggest deal that's happened in a long time was the whale that sold $9 billion worth up above $100,000, right? That to me changed everything, right? Because that's when I said, oh, look, back to being a regular security again, right? All of the hodl people and the have fun staying poor people and the we're in this for life people finally had to come to Jesus moment that this is now a security that trades on the market just like everything else. And, not to sound too smug about it, but, I bought the dip down to 80K right in front of my subscribers. It was long. It didn't work out. We scratched the trade. And because when you're in that trade and your long doesn't work out, you get bearish. You're like, yeah, this did not work for me on the upside. Guess which way I think it's going up? It goes down. And sure as shit, I gave a presentation 2 weeks ago, and the Bitcoin slide was technically challenged. It's got a big, huge top on it. It was like 88K bid at the time. And sure enough, 2 weeks later, we're giving a presentation with it at 66K. So I don't know. I don't really, I kind of don't have a super strong opinion. I remain pretty much on the bearish side. There was a clear separation in that. I don't know if you want to call it the debasement trade, whatever it is. The people from I'll use that example again. The people from Morgan Stanley came out and said 20% gold, not 20% Bitcoin, right? So that changed things. Like all that from that moment, all the money in terms of the debasement trade, the monetary, whatever you want to call it, all the money started going into the natural resources space. And everybody on the, with Bitcoin with this huge top on it and a whale that sold $9 billion worth and saw the thing collapse, everybody's saying, why am I in this thing again? Right? It's not doing what it's supposed to do at any level. And then the greatest thing is that all you hear on Twitter right now is, look out, Bitcoin's about to take off. And I think it is the most absurd thing I've literally ever heard in Bitcoin in my life.
Yeah. Is there a point you'd buy it?
I don't think I'm going to touch it for a while. Not while the natural resources trade is going on. I mean, maybe somewhere down around 40K on the chart, where like the least steep trend line comes back into play or something like that. But I don't know. I don't like the top on it. I don't like the whale sale. That changed everything.
Well, there's more than one. There was a big one, but there were several.
Yeah. And then this is where the hodl for life people were able to change their story and say, you said I was the one that said that changes everything because now
you said that now they're traders.
now they have to trade it.
I remember we were on right around when that happened.
And some of the Bitcoin people say, well, what would you do if you had $9 billion worth? Wouldn't you like diversify? And I said, I wasn't the one that said to hodl the thing forever in the first place. I knew that wasn't going to work out.
I'm sure their financial advisor was extremely happy they did that.
Yeah, exactly. Yeah, like, for sure.
It's very prudent, but it changed a little bit of the narrative. I've also heard people say it freed up a lot of Bitcoin to democratize it for other people to have, which is a compelling argument.
Great.
But it's still, I think,
it's
feeding into confusion about what the future trajectory is.
Yeah, it's going to be with us. I just don't necessarily think it's got to be at a price of $1 million per Bitcoin. Kind of thing.
Yeah.
You know,
J&J asking, does Tony have an opinion on the defensive sectors of the S&P, staples, healthcare, utilities, etc.?
Well, utilities just had a nice pop because rates fell, and so they're the dividend yielding sector of the S&P that look good, and they're probably set up pretty well in a market where baseload energy power is, you know, so dear. So I'm not opposed to being long that sector. Consumer staples, I really don't have an axe to grind, although they are performing pretty well. And what was the other one?
Healthcare.
Healthcare, I know nothing about. Less than zero. I can not even speak intelligently about healthcare. So I'm going to say
healthcare is very fraught with government regulation and I would say political risk right now. And there's some firms doing some really good work on that.
And you got to know science too.
Well, yeah, forget
Stuff
Somebody
like
was
that.
just talking to me about biotech. It's such a big bucket too. When people ask about healthcare, it's like, do you mean, or do you mean biotech, or do you mean some of the more traditional healthcare providers? We have an aging population, so there's demand. But if the government wants to hold down costs and affordability is an issue going into midterms, it gets a little. That's a really, really tough sector. George Noble's in the chat. Hi, George. We already talked about Bitcoin and semis, software. At some point, do these things get so beaten down that they look attractive? Or again, is it like there are better opportunities for me to try to worry about where the bottom is?
So as bearish as I sound right now, I am bullish for trade. And only because of some things that I see on the software chart. It's backed up to some old yearly highs. There is a less steep trend line that you can draw. You know, RSI and stuff like that across a couple of different time frames is completely oversold. You know, so and you can just look at the chart and see the straight. I mean, it slid down a fireman's pole. You know what I mean? Like it went straight down.
It was with all of these sectors. It's just like AI. I just had a conversation with someone about this. Indiscriminately, AI is going to kill the whole sector, and like no one's really looking at sort of under the hood to question whether that's really true or not. So one would have to think that there might be some exceptions to that, but who knows? I'm not saying software has one of them, but like it hit legal, and you know, some people were bringing up, well, some of this data might be something you don't want to feed into an LLM. So maybe AI is not going to completely kill that industry. You know, like I don't know.
Yeah. This is all playing out. You know, this is all playing out real time. Those are the best questions to ask. I certainly don't have the answer. I'm definitely concerned. I've started via one of my subscribers who is extremely good at programming and operating AI. So we started using it to create some stock screening things.
Amazing.
Yeah. And it scared the living crap out of me because we started asking it questions, and to watch it write programs to answer the questions you ask it in a minute and a half. And to have somebody that knows the development side of that say, just so you know, that would have taken a developer 10 days to do, and I would have paid them 20 grand to do it. And I was like, what? He was like, yeah, that's exactly what that would have been. Wait, and you just saw that. So now I'm staring at this thing like it's a monster, you know, and we're starting to, it's really, really fun, you know, and it creates its own front end and things like that.
It's crazy.
It's crazy.
We just had Jeremy Schwartz talking about the same thing.
Yeah.
Somebody was able to, a young kid was able to get like 80% of an app done
Yeah,
while they were sitting in the conference room.
And there's no more needing to know any language. You just talk to it.
Yeah.
You know, it's, you know, plug it, include the sectors that are all this and that, and it gives you a list, and you say, you know what, throw out this and that, and it throws those out. You know, you move on and it just starts doing things that you're just blown away by. So that's going to become a part of our world at some point, and we'll see what happens to the stocks. It looks like the bull markets won't quit there, but they're also flat on the year kind of thing, while everything else is taking off. So
that's going to be talk about trying to calculate in real time the impact of all this. It's so hard, and it's so fragmented too, depending on what sector you're in. Someone asked, what are you, I think it was Luke, what are you most excited about at the TG Macro Conference? Good
Man,
question. I didn't even ask you or pay you to ask
that. Is a great question. I felt like since I woke up this morning that like I was going to the Super Bowl for me. No exact. I have to say, from the most exciting thing is going to be when everybody is done speaking, and I can just kind of be like, wow, you know what I mean?
Yeah.
Like I brought everybody that I could together to put their best foot forward and give us some ideas about the markets, and this came out. You know, so that's
because you never
special.
know. Like that's the
Yeah.
I think the wonderful people have opportunity of having people together. And I think we end with them all in a Q&A together, because not everyone has the same view. So for me, I'm super interested to hear, you know, where do they disagree?
Yeah.
And I also want to hear what the questions are, because you have a really smart community.
Yeah.
As do we. And I'm really interested to hear, like, what are they noodling around at, or what are they most interested in? Because I think that gives you a sense of sentiment as well, right?
Yeah. Yeah. They want answers, you know, they want answers. And it's kind of our responsibility to at least come up with, this is what I think, you know, this is my most honest opinion about where the opportunity is this year. And that's kind of what I guided everybody to speak on. So I think that, you know, by the time we hear from everybody, it's going to be like, wow, you know, we'll either learn, you know, everybody might get up there and say, buy gold. You know what I mean?
Yeah.
And we'll learn that that's trade is a little too popular, and everybody might get up there and say, you know, buy software on the dip or something like that, or buy this tech stuff.
Yeah.
And so it's going to be, that part to me, to kind of sift through all that, is going to be really, really rewarding. And then putting in a string of 10 years in a row of TG Macro conferences.
Yeah.
That's
is that the
oh yeah. 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 We're not just doing one and done of these. No, I love this place. I love coming here. People love coming here. This is our first one, so we're really hoping that when buzz gets out about how good this was, that we literally have standing room only next year.
The other thing I think that I was thinking about heading into this, and I'm working on a reporter's notebook, another one, guys, just pulling the threads through all these conversations. Super excited that we're going to have a global view here as well. Yeah. Because I think right now that's never been more important, whether we're talking about commodities or just sort of, you know, diversification. That's been coming up a lot in my conversation. So I'm super interested to hear what everybody has to say about international opportunities, but whether there's disagreement about where that is.
I'm going to tell you that I am not looking at them.
You're not looking at international markets?
No. I feel like there are enough serious markets and enough change going on here in the US, and there's plenty of volatility. You know what I mean? Like at the end of the year, if Europe is up 23% and the S&P is up 18%, did I do myself a justice by following the stuff across the pond that I don't know anything about? Or did I do better playing in my own sandbox in the sectors that were super volatile bull markets, which I'm good at? You know what I mean? Like, so I just don't feel the need to look across the US border at all. And I know that I sound like a Cro-Magnon trader when I do that, but I used to try to have international savvy and kind of know what was going on. And the only thing I care about is my P&L. You know what I mean? Like, I only care about what the money says at the end of the day. So why do I have to go learn about something, then understand their politics, their legal issues, their this, their that? I have no interest. I have no interest. There are plenty of bull markets going on here in the US. I think it's literally, the country is changing so rapidly as we speak that it's worth paying attention to our markets. I think plenty of opportunity.
Trade what you know. Right?
Yeah.
Lean into your area of expertise.
Yeah, especially when things go crazy. You know what I mean? It's like, okay, so Europe just divested from the United States because they didn't like Trump's tariff policy, and now we're going to go invest in that country. Yeah. Tell me where that makes sense.
Yeah. Well, they did perform well last year.
It's great. It's fantastic.
there's always
and I have nothing against them. It's not that. It's about if I'm going to go chase a market that's plus 5 more percentage points than mine, then am I doing myself any good? That's all.
It's where you see the best opportunity at the end of the day.
Yeah. It's this you know, the casino is open in the United States. That's all I know.
Fantastic. Tony, so fun to do this.
I'm so excited, Meg. I'm so excited. I'm like, I have nervous energy. And, you know, there's a lot of people here from my subscriber base, and a lot of people here that have supported me since the day one of starting this company. And so for me, it's like a mini wedding. Like, I don't even know how to say it. There's people from, like, I know for 25 years. There's people that I know for 5 months that I love.
People that were just meeting.
People that were just meeting yesterday. And I, like, you know, I had a gentleman that I've never met before hook me up on Twitter and say, hey, I left you a bottle at the Nashville at the Virgin Hotel. I couldn't get there.
Oh my
Sorry, I
gosh,
couldn't
how
make it.
wonderful.
But, yeah, but I dropped off a great bottle of Tennessee whiskey for you. I was like, jeez, you know, that is why.
Now we just need Chris Stapleton to sing us the song,
yeah,
and
right?
it will be great.
That's maybe next year's. That's maybe next
year.
year's. But that's why live events are the ultimate luxury item. You know, while this isn't the World Series, that's okay. But this is a live event with a lot of bodies getting together from all different backgrounds and places, and we can share, you know, common experience trying to figure out the markets together.
Well, it's also people who have community online who are able to meet in person, because some of them probably haven't met in person, even though they're conversing and trading trade ideas.
Yeah, that's the cool part. I have subscribers that have been subscribing for years that I've never met that I'll get to meet at this. So I mean, I can't even tell you how excited I am about that.
So fun, so fun. Well, we'll try to keep you guys all abreast of what's happening and some of the great knowledge that we have. Tony and I will jump on another show at some point, and I'm sure be like reflecting on this as we do shows and say, do you remember when so-and-so said this and how it's playing out? So it's a lot of fun. Thanks for taking the time, Tony. I know you're busy.
God, I'm trying to kill time before the kickoff tomorrow, Mag. You know what I mean? I think it's about time to have a cold beer and relax a little bit and get into Nashville mode. And,
exactly. You might be able to twist our arms. A few of us might join you on that.
I think that sounds fair.
Awesome stuff. Thanks to everyone for watching. As always, I'll be back on Friday with Dale. In the meantime, take care and good luck out there.